All right, we are live. Welcome, ladies and gents. Let me know if you guys can hear me. For those who are watching the recording, you can skip 3 to 4 minutes ahead. I usually give people a few minutes to come in so we can all start together. In the meantime, let's organize these channels. Welcome, Eva. Excellent. Sweet. For those who just came in, welcome. We're going to start in about 2 or 3 minutes. Going to let people come in, and then we will go from there. How's everybody's weekend going so far? Kia, welcome. Kia, you're also welcome if you want to. I'm in the futures channel, the voice channel. If you want to talk later on, or not later on, but talk during the class as opposed to just type. I figured it'll make it easier. Let's bring up my screen. Sweet. All right, we'll keep that up there for now. Let's move this here. Welcome. For those who are just coming in, we're going to start in 1 minute. Let me know if you guys can see my screen and if you can hear me all right. Well, if it isn't Doc himself, welcome, sir. Of course he left. He always does this. He always comes in and then jumps out. Welcome, Ironic. How's everybody's week going so far? Hopefully it wasn't too hectic in getting your Christmas presents, assuming you're a last-minute buyer. I guess it looks like everybody got their presents already. All right, let's get started. A relaxing one. Glad to hear it because apparently it's been hectic for some other people. So welcome everybody. This is the Let's Learn with Advent class, December 22, 2024. My name, well, I already told you my name. My name is Advent, and I'm not a financial advisor. Anything that we go over in this class or any of my content is not financial advice. Trading does have its risks, so please do your research before you engage in trading. One thing that I want to make note of for those who are new here. You can pretty much ask me anything. You can think of this as a group coaching session, similar to what I would give to my one-on-one coaching sessions, but with everybody in here. So you're all welcome to type in the chat whatever questions you have. There are no stupid questions. Anything goes. If you're having trouble in your trading, if you need some guidance in your trading, in your life, anything is fine. Just put it in the chat and I'll respond. How do I let my green trades go for longer? As in, how can I let myself hold the trade for longer to secure even more profit? Fantastic question, Ironic. Let's use Friday as an example. This is the YM chart for futures. This doesn't really matter what you're trading. It's price action anyway. So one thing that I like to do to maximize my profits when I'm trading, let's say if I have a runner position and I want to really maximize that as much as I can, what we can do is we can trail our stop loss in accordance to what the candles are doing, right? Let me get rid of all these lines over here so it's a little clear. Excuse me. So, Ironic, do you trade the strat? Because I'm going to use some strat terminology that you may not be familiar with, but hopefully you do. So you trade liquidity and supply and demand. Gotcha. So this is going to be more of a strat setup. We're going to be taking this 312 up. And Lucy, let me know if you know of the strat as well. If not, I'll speak on it briefly after I'm done here. Or actually, let's make this easy. Let's briefly talk about the strat because I don't want to go in too much detail about it. So super quickly, for those who don't know, the strat, pretty straightforward. Also, let me share my screen on Discord because Kia, if you're looking on YouTube, it's going to be delayed a little bit. So you can just watch it live there. All right, so for those who don't know about the strat, I have an entire playlist on the YouTube channel going over the strat in its entirety. Pretty straightforward. The strat consists of 3 scenarios, a 1 bar, a 2 bar, and a 3 bar. As we can see here in the chart, there's a 1, a 2, a 3. And each candle signifies different things. A 1 bar means consolidation or an inside bar. It did not break the previous high and low of the previous candle. Then there's a directional bar, which breaks the previous high or low. It just lets us know where price is heading. And then a 3, which people may know as an outside bar or a mother bar or engulfing bar, it breaks the high and the low of the previous candle, essentially just expanding the range. And where is this? So your stop loss, let's say if I take this 2 down, so this is the previous candle, this is the current open candle. As soon as it breaks the low, I'm going to get in and my stop loss is above the candle. So my stop loss could be here or it could be up here, really up to you and your risk tolerance. So we have the setup candle, which is this 1 bar or inside bar, and then the trigger candle, which is this 2 up or this 2 directional bar to the upside. Your stop loss can be at the trigger candle like this, or it can be under the setup candle or 50% of the setup candle, really whatever you prefer. So For the sake of the conversation, let's say that my stop loss is under the 1 bar. So once I get in here and it breaks this high of this 1 bar, my stop loss is under the 1 bar. So if it comes back and hits this, I'm going to get stopped out. And then my targets are going to be the previous candle highs. So target 1, and then target 2, 3, 4, 5, 6, 7, etc. All right. Now that we have that out of the way, let's say that you had 2 contracts and you really want to maximize a third contract. You take one contract off here, another contract off there. So one contract here, another contract there. So what we can do is to maximize the runner, and I'm going to use this box as an example for our stop loss. So let's say we take profit for the second contract here and we have one more, but we really want to maximize that. What I like to do is I'm going to wait until the candles close, and then I'm going to move my stop loss as it continues going in my favor. So as we can see here, once it hits target 2, the candle closes, and then instead of my stop loss being down here, it's already going to be a break-even trade. So I'm going to move my stop loss under the candle like this. Then if this candle continues to the upside, I'm going to wait until this candle closes. Then I'm going to move my stop loss under the candle. This next candle did the same thing, triggered 2 up. Once this candle closes, I'm going to move my stop loss under that level. Same thing for this next one. And I'm going to keep on moving my stop loss up every time the candle closes so I can continue catching as much of the move as I can. And as we can see here, we kept on closing 2 up, 2 up, 2 up until finally price reversed over here on this 2 down reversal. So if my stop loss, once this candle closed, this green one, I put it under here, this candle right here would have stopped me out. So on this runner position, I would have gotten 759 points from my entry. For those who don't trade futures, 759 points per YM contract is $3,795 for one contract. And you would have made that in about 2 hours and a half. If you had one MYM, or the micro contract, that's just divided by 10, you would make $379.50, give or take, with commissions and fees in about 2 to 3 hours. I would gladly take $380 in 3 hours per contract. So that's how you can maximize your trades as you trail it with the time frame. Does that make sense? Did that clear it up?
Yo.
You? I can hear you. Yeah, because most.
Yeah, I joined kind of late, brother.
You're good. Ironic said, yeah, because mostly when I see green on a trade, I take profit way too early and I see it run for about 50% plus more. Question for you, Ironic. Why are you taking the profit too quickly? What goes on through your mind? Are you taking profit based on your targets that you set, or are you just looking at the P&L? Just looking at the P&L? So as a general rule of thumb, you do not want to have your P&L on when you're trading because it's irrelevant based on your plan. P&L did not get you into the trade. It shouldn't be getting you out. The chart got you into the trade, so the chart needs to take you out. So definitely turn off your P&L because it is irrelevant to the trade system and the plan. Also, for those who are in here that just came in, if you're new here, ask me any questions you want in the chat. For those that are in my group, you're welcome to come off mute and ask questions. Also, for those on YouTube, for me to continue, I need 50% participation. So if you have not already, hit the thumbs up or hit the like button, and we'll just hang out until I get a few more. That's all I ask for these free classes that I give you guys. Excellent. So yeah, more questions in the chat. We got 45 minutes. Whatever questions you guys want to ask, put it in the chat.
I got a question.
Go for it.
How do I add the strat numbers to my trading view? You know, I'm new, so I haven't got a chance to.
Great question. Somebody asked me this earlier as well. Hopefully they're in here. I think they already added it, but for those who don't know, you're going to go to indicators on TradingView. You're just going to search up Strat Assistant. Whoops. I can't spell apparently. Strat Assistant is going to be the one by Ricky's Carroll. You're going to add that to your chart. It's going to make your candles look really ugly like this. And I'm very visual and I like cleanliness. So once you get it on, go to settings. I think I have the previous day low and high off because I don't need that. I don't need that either. Style, where it says bar color, just uncheck that. And it'll give you your regular colors. And then you can just, you can customize it however you want. So by default, it has like the 3 candles as like purple and stuff like that. And it has the arrows signifying 2 up or 2 down. You can turn that off too if you want to. But I just have mine like this. I also took off the full time frame continuity because I don't really need it since I already know what the continuity is when I'm looking at my full chart like this. But if it helps you guys to have it on, hey, definitely do it. Did I miss my question? David, I didn't see any question in the chat that you posted. This is the first message I'm looking at here that you've mentioned so far in today's class. Oh, yeah, I haven't looked at it yet since you sent it, or I saw it when the class started. It's a voice note, so you might need to put it in the chat. Or I'll just respond to it when this class is over. A TTO on the 1 hour for Microsoft, a bullish one or a bearish one? And are we looking at this right here? Like, are we looking at, let me highlight the box. Are we looking at this or was it something else? So is it what I have highlighted in the box or are we looking at something else? Gotcha. I would not consider this a TTO because it doesn't meet the guidelines that I require. This is just a pullback because so let's mark off some levels. This is the 4 hour level. And let's mark this high for the daily. Let's go back to the 1 hour. So for me to get the best possible TTO, I want all the time frames or the higher time frames. It doesn't, the weekly and monthly doesn't matter. I'm just more so when day trading. But in this case, this wouldn't really be a TTO because there's no trend that's been established yet. If the day opens up, let's say tomorrow, if the candle opens up over here like as an inside bar and then it triggers a 2 up, we're still not clear on what the trend is for the day, right? The 4-hour needs to trigger for the 4-hour to be bullish, and then the daily needs to trigger for everything to be bullish. And I prefer to have everything already bullish, and I'm just getting in on the lower time frame to hop in on the trend. Sure, you can get in on this 2 up on the next candle on the 1-hour for an early entry, but it might not be the highest probability because what may happen is, let's say you get in, it might just start chopping back and forth because the daily is still trading inside bar. So yes, you can get in on that if you want to. I personally wouldn't because it's not the highest probability version that I would take. Let's look at an example of the previous day. This was on, was this Wednesday? Yeah, this is on Wednesday. Yeah, this is Wednesday. So this is the daily 2 down trigger. And this would be Monday. Oh, whoops. 30. Oh, this makes it even easier. This will be the 4 down trigger. And then we were looking at this Wednesday. So this will be the Tuesday trigger. Daily 2 down. And then, of course, if the 4-hour is red, we already know that the 1-hour is red as well. So as we can see here, we gapped down from the 4-hour, triggered 2 down on the 4-hour, and then we broke the low on the daily. So we're bearish right now. And generally, I wouldn't take this. You can see this as like a little, where is this? You can see this as a bearish TTO like this or bearish H pattern if you want to. I probably wouldn't enter here just because that bounce back up is really strong for me personally. I probably would have entered in, well, probably not because I don't trade the afternoon, but I would have entered on this 3 down right here, like this. Because one, the daily's red, the 4-hour's red, and the 1-hour is red. So I'm just going to be getting in as soon as it goes 3 down. My stop loss will be here. My target is going to be here, and whatever else that the market may want to give to the downside. So this is more of one that I would prefer. Let's look at Tesla. So I can show you one that I would prefer. Let's hide all these fibs. This is not the best, but I'll show as an example. We have a gap up, so we already know that price is bullish. It's quite simple. The daily's green, the 4-hour's green, the 1-hour's green. All I'm doing on the 5-minute is waiting for a pullback and getting in on a reversal back to the upside. So this 312 bullish reversal, I'll get in here, aim for this high, and whatever else the market wants to give. Granted, I would want the trigger to be a little lower because the risk to reward to the TTL being completed is not the best for me, even though it is a valid TTO. I think YM had one on this week that somebody mentioned to me. Actually, YM's been pretty bearish, so this will be an easy one to find. Any good ones? So let's look at this bearish one over here. We have a gap down, broke the 4-hour low. Did it break the daily low? It's Tuesday. The daily low's down here, but close enough to break it. So we're bearish. We reverse back to the upside. As soon as it reverses back into the bearish continuity, I'm going short. So I'm going to get in on this 2 up, 2 down reversal. Stop loss is there. First target is going to be the TTO completing, and then whatever other targets you may have to the downside. Did that make sense? And did it clear it up? Cool. What other questions do you guys have? And you guys can put questions in the chat. You don't need to wait for me to finish other questions. You can just continue to put questions in the chat. What is your rule with trading the market open? Eva, are you asking if I wait for a few minutes? Oh, perfect. I don't wait until the market. I used to wait like 10 or 15 minutes. If it triggers my trade in 1 minute, I'm gonna get into the trade. I don't wait.
Got a question.
Go ahead.
So how long are you typically in a trade for?
That depends how fast the market wants to give me my targets. Generally, on average, 5 to 10 minutes, sometimes a little longer if it slows down. But usually within an hour, I'm out. It's hitting most, if not all, the targets.
And then your risk to reward.
That is dependent on the setup. Some setups can be 1-to-1 risk reward. Some could be 1.5. Some could be 1-to-2. Some could be 1-to-5 or even 1-to-10. It really depends on the setup and what's going on. Hey, Shakui, welcome.
Hello, thank you.
Did that answer your question, Eva? And Shakui, I think you might be new to these classes. You can ask me whatever you want. You can put it in the chat, come off mute, it doesn't matter. And I'll answer your question. I'm also on YouTube, so I'm reading questions people have over there as well. Excellent. Lucy, you just said TXN. I don't know what that means. I need more context. Please be more specific if you're gonna just put things in the chat. Unique Show said, hey, can you check out S&P 500 or do you only trade Microsoft? I don't trade Microsoft at all. I haven't traded Microsoft in like a year or two. Let's look at SPY. All right, I'm looking at SPY. What do you want me to look at? If you guys are gonna ask questions in the chat, please be as specific as possible because looking at SPY doesn't tell me anything. Are you looking at it bullish or bearish? What's the context? What feedback do you want me to give on SPY? Definitely, Shakri. Let me finish Unique's question and then I'll go to NVIDIA. The SPY looks like it's going to break out on the 4-hour chart, but it already broke out on the 30-minute chart. Again, are we breaking out to the upside or the downside? I need more context. Are you looking at bearish or bullish? Because I can see it broke both sides. Are we talking bullish or bearish? Oh, black gold vape. I'm actually glad that you mentioned CVS. I added it to the watch list. We were talking about it earlier this morning. I'll go over it in a few. It looks like it's getting rejected off the 30-minute chart. I'm wondering if I should just get on a call now, or I guess patience is a virtue, but I'm looking for a bullish. You're looking for bullish movement soon. I am very happy that you presented your question like that, because this is a fantastic learning experience or learning opportunity. Let's look at SPY. Weekly, extremely bearish. We have to break this level and this level to determine what to do for the most part. Daily is an outside bar or 3 up to the upside. We are getting rejected a little bit. The daily needs to break this high. So it's not an inside bar. 4-hour needs to break either one of those. And the 30-minute got sold off a bit. All right, so before I answer your question a little more, you asked if you should just get into calls now. What's your call setup? What's telling you to buy calls? Hey, Tevin. Welcome. It looks like it's bouncing off the 200 MA or the 20 MA. I don't use MAs, but I want to see what you see. Is this just moving average? I'm not sure which one. I haven't used moving averages in like 3 years. I'm assuming it's moving average exponential or moving average simple. EMA. Exponential moving average. Feels dirty putting these on my chart again. It's been so long. All right, let's adjust this to 20. I'm assuming that's correct. At least I hope so. Yeah, so I have the moving average, exponential. Maybe I have the configuration wrong, but looks like it's under the 30-minute from what I see here. But nonetheless, yeah, this is the 30-minute chart. Maybe you're using extended hours. All right, there we go. You're using extended hours. I don't use extended hours. All right, so I'm looking at this chart based on the 30-minute and it bouncing off the moving average. Here's a question that I want to ask you. Based on your journaling, if you journal, what is the win rate of this trade if you were to take this, if you were to buy calls? How confident would you be if you take this trade for calls just because it's bouncing off the 20 EMA? You're about 80% confident that it will bounce 2 times, not 3 times. All right, where's your stop loss and where's your targets based on this setup? And where's your entry? Where are you going to get in? So where's your entry? Where's your stop loss? And where's your take profit levels? Underneath the 200, let's add the 200. Maybe my thing is wrong, but the 200 is all the way up here. It's not under the 30-minute. So we're looking at ES. We're not looking at SPY. So maybe my settings are wrong, but the 200 MA is up here. The 30 is down here. So let's just say for the sake of the conversation, it was under. That'll be about 15-point stop loss. And then your exit would be 60.88, which is over here. What's the win rate on this setup for you? Based on this setup that you just mentioned, how often does it win? And how often does it lose? The question I asked is, how often does this setup win and how often does this setup lose? I think once it breaks through the 200 and the 250 EMA, it's going to come back down and bounce off the 200. So again, just so I'm clear, how often does this setup work for you? What's the win rate? The setup is pretty efficient. It wins all the time, every time. The stochastic isolator, I'm assuming that's what it is, crosses from the top or bottom. It really goes crazy when the stochastics break through the 50. Hey, if it works, it works. Keep doing it. It's just really not clear to me because it's really, at least based maybe the way I'm asking it or the way you're explaining it, it's just still not clear to me. The exact numbers, and I like to be very detail oriented. If it works for you, hey, great. The only thing that I would ask you to look at is your original question was I'm wondering if I should just get in on calls. If you have to ask that question, I don't think the setup is efficient, because you should know if you should get in or not based on your analysis and based on your setup. So I would just ask you to be more specific and refine the parameters for the setup. Because if you need to ask if I should get in or not, that's a problem. Cool. All right. I got to go over Black Gold's question and Tevin, your question, but let me look at the W on NVIDIA that Shaqui mentioned, and then I'll get to the other questions. Wrong ticker. Cool. So Shaqui, it's not the cleanest W that I would prefer. Nonetheless, we can see it here where's my brush? We have the top left of the W over here. We head back up, we reverse back down, and then we reverse back to the upside on this 3 up. So if it's going to be, if this could have been a swing trade, so somebody could have got in here. Oh, whoops, wrong tool. Somebody could have got on 3 up. Stop loss is under the 3. First target is going to be the center over here. Second target is going to be over here. And that'll complete the W. Generally, what's going to happen is, if it's going to be a valid W, it's going to hit up here, come back down to retest this area, and then head back up. Or it might just completely just go crazy and go a lot higher. But we'll have to see what happens. I do prefer a cleaner one than this one. I don't really like this like big candle than this like choppiness over there. But hey, it's a W. We'll see how it pans out. If you want to see cleaner examples, if you go to the playbook setup section in the educational center in the Discord, I have one over here. So this one is super clean. This one is a cleaner example that I would prefer, that I have there. But nonetheless, that setup appears on any time frame. It just, depending on the time frame that you're looking on, it'll take a little longer to set up. So you're not going to see it that often on the 4 hour compared to how often you might see it on the 5 or 15 minute. All right, let's look at CVS, and then Tevin, I'll get to your question. Also, Tevin, if you want to talk, you can, I'm in the futures channel in the Discord. You can join in there if you want to talk instead of type. Let's see, we're going to look at CVS. So for those who weren't with us this morning for CVS, this is what I'm looking at. So hopefully tomorrow it does not gap up, because I really hate when it does that. These are some targets that we have here. And this is the contract that I'll probably look at, the 50 strike price for February, just to get some time. Based on the stop loss and based on the targets, this is approximately what the contract will be worth and how much you'll lose per contract if it does go against us. So you guys are more than welcome to pause this video later on and then take this information down. Not financial advice, just what I'm going to do. Hey, my pleasure, Unique. Thank you for your question. I took 44 calls off the bounce of 44.12 at 3:30 Friday. My entry was off the inverted FVG on the 5 minute. Inverted FVG on the 5 minute around 3:30. I don't really trade ICT like that, but let's see. All right, so there's a fair value gap over here. So I'm going to assume that you got in on this fair value gap bounce right over here. Fantastic entry, if I do say so myself. I'm jealous, but pretty nice, if I do say so myself. We also have a mini little W right over here. Shaqui, if you can see it, it already hit the first target with the higher low reversal. Generally, I wouldn't take a swing trade off a 5 minute time frame. Granted, you ICT folk are built differently. So we'll definitely see what this week has in store. One thing I love about CVS, when that price moves, those contracts hit easy 100% trades. But yeah, I definitely do like CVS. It's bouncing off. I don't have my Thinkorswim open, but it's bouncing off a monthly broadening formation off the daily time frame. So there's a monthly broadening formation that I have over here that it's bouncing off of. So should be a good reversal. Let's just hope it does not gap up because I don't want to be left behind. And I'm very, very picky with my trades. If it leaves me behind, I'll leave it alone. That's just me. We'll pray to the stock gods so it can open up as an inside bar on the daily so we can get in perfectly. All right, Tevin. When we're determining time frame continuity to the upside or downside on a time frame, do we look at the most recent candle and see if it closes bullish or bearish? And does the most recent candle need to be a directional candle to, or like a two candle, to determine time frame continuity? Great question, Tevin. Is this for a day trade or for swing trading? Just so I can give more clarity and give a good example. So Tevin, hopefully you're still in here. Is this for a day trade or a, I was just asking in general. Cool. So like, I'm not sure when you got in, but like I was mentioning earlier, right? For TTOs, what are my requirements? The daily, the 4 hour, and the 1 hour need to be in the same direction. And then I'm simply taking a reversal off the 5 and 15 minute to get back into that, continuity, right? Which is bullish or bearish. Now, let's say for the sake of NVIDIA, let's mark off these levels. And I encourage you guys to mark off these levels as well. So daily 2 up. Daily 2 down. Let's go to the 4 hour. Tyrone, your mic is open. 4 hour 2 up. And 4 hour 2 down. So in this case, let's just say I'm looking at the 1 hour. So I already have my levels marked, so I don't need to actually go on those time frames. So if we break below this candle's low, the 1 hour is going to be red, the 4 hour is going to be red, but the daily is going to be an inside bar. So generally, I would want the time frame to trigger like a 2 up or 2 down. I don't really like if it's like, let's say if the daily 4 hour and the 1 hour are all inside bars, but they're red, I wouldn't really consider that bearish time continuity because we haven't decided if we want to trigger bearish or bullish. So in this case, let's say you were looking for shorts. Yes, if you wanted to, you can take the 4 hour and the 1 hour bearish 2 down once it reverses. However, be mindful that the daily needs to break this low or else it's going to be an inside bar. So you may get caught up in chop where it doesn't even break the daily low and it kind of just keeps on going sideways all day, which you don't want. In this case, if I want to be looking for longs, I'll be more inclined to take a long setup in this example because not looking at ICT fair value gap bounces right now, but just to keep it strat related, if the 4 hour, so the 4 hour is going to trigger once this candle high breaks. Once this candle right here breaks, the 1 hour is bullish. If this breaks, the 4 hour is bullish. If this breaks, the daily is bullish. So I would consider that bullish time continuity for day trades. Obviously, overall, if you're swing trading, you're really probably not going to care about what the 1 hour is doing. You really want to pay attention to the monthly, weekly, daily, things like that. So hopefully that answered your question in the sense that we really want to make sure that it's triggering the direction, not just it's like an inside bar that's red, right? Like let's say, for example, for NVIDIA, technically we're bearish on the weekly because we triggered 2 down and 2 down. However, this last week closed as a failed 2 down candle, and it closed kind of like as a hammer doji looking candle. So this can be a potential reversal signal that we have here back to the upside. And technically, you can look at this as a bullish TTO if you want to as well. We have the push up, the reversal, and then we just take the reversal back to time continuity. You're seeing my screen for CVS. I'm on NVIDIA. I don't have CVS up. Might need to close Discord and come back in, Shakwi. I'm on NVIDIA right now. Yeah, exactly, Tevin. And one thing that you want to pay attention to as well, this is a little more advanced, but I'll do my best to explain it. I don't talk about it too much. I know Brown usually does, at least when people ask him. But let's say, for the sake of the conversation, it's a brand new month and it's a brand new quarter. The quarter is going to be an inside bar. I think the term is called uncoupling. So everything is uncoupled, meaning the quarterly is inside bar, the weekly is inside bar, the daily is inside bar, the monthly is probably an inside bar. So we don't have no true direction yet, right? We need to wait until those time frames start triggering a direction to really determine what's going on. So I won't go too deep into that right now because it's a little more advanced. So the strat, we can talk about that as you continue your studies, but we'll go over that when the time comes. Cool. Mike asked, does NVIDIA have futures? Negative. NVIDIA is a regular stock. It does not have futures. Now, NVIDIA is in tech, which the tech futures is NQ. And if you want to find out, you can always go to Google and put, what is the NASDAQ comprised of? And does it have it here? And it'll tell you here all the holdings of the NASDAQ. So the NASDAQ or tech has Apple, Microsoft, Amazon, NVIDIA, Tesla, so on and so forth. So it'll give you a list of all the stocks that are in it. Cool. Hey, my pleasure, Tevin. Thank you for your question. Also, friendly reminder for those who are not in my group that may want to join my group. This is the last month that you can pay one time to get in for lifetime access. If you want to join after the month when the new year starts, it's going to be flipped to a monthly subscription. So you can use the code December24 for a one-time payment of what, $24.50? 24. Yeah, $24.50, one-time payment. You never pay again. If you want to get in after the year is done, or when the new year starts, it's going to be a monthly subscription. So if you get in prior, you will only ever pay one time. For those watching on YouTube, it'll be in the description for the website, and I'll post it in the chat as well. Cool. Let's move on. What other questions did you guys have? Mike, you want to go over fair value gaps? What do we get with 2450? Great question. You get full access to me where you can ask me questions whenever you want. You also get a lot more information that's not on my YouTube channel. We live trade every Tuesdays and Fridays. We have multiple classes throughout the week to make sure we get you where you need to be in your trading journey and career if you want to go down that path. And a lot more that I can't think of right now. Let's go over fair value gaps briefly. One thing to note, my group is not a signals group. So if you want to come in here to get free trades, I don't throw signals out. That's not what my group is. My group is an educational based Discord where we teach you how to be a self-sufficient trader. So if you're looking to get free trades and free signals, my group is not for that. While I do give trades every now and then, I'm not here to spoon feed anybody. I'm here to make self-sufficient traders. Not that I have anything against signals groups, just that's not what I do. There's more than enough signals group out there. YM 30-minute and where you would have reached target. I already went over staying in the trades longer, Mike, in the beginning. I'm not sure when you got in, but you can just watch the recording or we'll talk about it in the Discord when we finish up here. So fair value gaps. Let's go on the 5-minute just so we can see some more. I don't trade ICT. I only know of some of the concepts. I can't properly explain a fair value gap. If you do want to dive deep into it, go into the Discord and go to the ICT section. Let me move this down here. Go to the ICT section. There's going to be a link here. ICT index. Click on that, literally type in fair value gap, and it'll explain it and it'll tell you exactly what it means. There's also, what's this? What's the YouTube? I think T-Trades. I think it's T-Trades. Yeah, T-Trades is, he explains it pretty simply. Yeah, T-Trades right over here. You can check his YouTube channel. Just type in fair value gaps, T-Trades, and he'll give you like the actual idea behind it. I can't really explain the idea behind it properly. All right, fair value gaps. I visually know what they are. Anyway, fair value gaps, we're going to take 3 candles. So let's say these last 3, 1, 2, 3. The middle candle, it's going to be the space in between the wicks of the third candle and the first candle. So as we can see here, we're going to connect this first point and then this point right here. So that's a fair value gap. Pretty much a solid part of the body that the wicks aren't touching. So in between that space. Let's go to CVS to look at the fair value gap that Black Gold Vape entered in on. So we have this 3 candle right here. So this 2, 3, and 2 candle. On this 3 candle is a fair value gap right here. So Black Gold, once it came into this fair value gap, he bought calls or bought shares, whatever it was that he did. Again, I don't enter in on fair value gaps in and of themselves. I would only ever get in on a fair value gap as extra confluence, but I never get in on a fair value gap just because it's a fair value gap. So hopefully that answered your question. Yeah, he got in on option calls or stock option calls. Does that make sense, Mike, on what a fair value gap looks like? Gotcha. Fair value gap on the 4-hour. Is my screen imploding? Oh, I don't even have the candles, do I? There we go. Yeah, there was a sweep of liquidity on the 4-hour as well. So an example, how I would use a fair value gap as confluence, as additional confluence rather. Let's go on the 30-minute. So like the trade that I took on Friday for YM, which is the W retracement. So we have a sweep of liquidity over here. This is more so the ICT version with a lower low. I prefer a higher low. So draw my fib from down here to up here. We have a little fair value gap on the 30-minute right here in between these two wicks. So for this specific setup, I like to catch the retracement if it lands on the 50 fib, if it's near the center of the W. So I had this fair value gap as additional confluence that would have potentially helped me to get a bounce off that area. The 15-minute had a better one, as we can see here. 15-minute had this big fair value gap. And what I want to see when the W is printing, I want to see displacement or a fair value gap get created in the center of the W to let me know that it's going to be a strong move up. So here we had a pullback into this fair value gap. My 50 fib is inside of the fair value gap and near the center of the W. So I'm getting additional confluence for this trade. Yeah, ICT people see it as a breaker block or order block bounce. I just see it as a W. It's just easier for me. And then somebody was like, actually, that's an order block or breaker block bounce. I'm like, cool. Looks like a W to me. So this setup is top tier, one of my best ones. Has about 75, 82% win rate. I got to double check my journal, but something in there. And when the trade hits, that thing hits. Easy money. All right. We are over the hour. before we wrap up, what was everybody's biggest takeaway? What was something that you learned today? What was everybody's biggest takeaway from today's session? What did you learn? And for those watching the recording, you can put it in the chat or in the comments what you learned. I feel I learned once I get a breakout on a half an hour or 30-minute time frame, I can get a breakout on the 4 hour. Then I can get a breakout on the day. Pretty much, you know, it's something that Rob Smith calls almost like a, not exactly in what you mentioned, but it's a multiple time frame break, right? So sometimes the 4 hour, the daily, and the 1 hour and other time frames can break and trigger at the same exact price. But essentially, that's how it works, right? Price is fractal. So price is going to reverse from the 1 second to the 5 second to the 30 second to the minute to the 15 minute to the 30 minute to the 4 hour and vice versa. And they'll just do a chain reaction back up or back down, depending what the market wants to do. Any other takeaways before we wrap up? Give it about 2 minutes and then we will go on our way. Hey, no problem, Unique. Yeah, the only thing that I don't like about YouTube is that it's delayed. So I'll say something and it'll be like 2 or 3 seconds behind, and then I'll see what you guys are typing. So hopefully they fix that down the line, because it does get a little annoying sometimes. All right, looks like we are all good to go. Thank you guys for coming out. The same link that you used to watch this is going to be the same link to watch the recording. I will see you guys on the internet. Have a good night.